Hi there and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah. Devina, good morning.
Good morning. And, let's just quickly first, before we dive into our markets, take a global check to see how the markets are set up this morning before we turn to the Indian markets. So U.S. equities in yesterday's session had quite a turbulent move if you were to see it. Remember, since September, they've given up almost 100% of all their gains. And yesterday's session was supposed to spur some momentum, some risk appetite back into the markets with the G7 meeting, but that wasn't enough. Though intraday, you did see a comeback on the announcement of the 50 basis point Fed rate cut, but the comments that were made in the press briefing post that clearly turned the tables. And by the start of the session that Jerome Powell had, the indices were up about 0.5%, and by the end of it, they lost and they were at the lowest point of the day. Why that happened? Obviously, because of the fact that even while they've taken this 50 basis points cut, Mr. Powell clearly said that these tools are probably insufficient to deal with the economic crisis that would come about because of coronavirus. He also said that the Fed didn't discuss any other tools except for this rate cut, probably also indicating that this was the end of the rate cuts that we could see coming in from the Fed. So that is something that kept the markets a little bit on the edge. Volumes, therefore, spiked as well. So the 5-day rolling volumes that you saw for US stocks surged the most since Black Monday of 2011. Now, this happened when the S&P downgraded America's sovereign rating from AAA to AA+. Now, since that day in 2011 to now, this is the second day where you've seen the volume spike the way they did. Aside from that, Asia as a pocket is where you need to focus on as well. We are doing a bit of our own, quite decoupled from what the US did in yesterday's session. About 0.1% higher for China. Hong Kong's down about 1/4. Nikkei is trading higher by about 1/3%, while the SGX Nifty is trading absolutely flat. Well, no big cuts. Staying flat is also not a bad thing, so watch out for that. 11,272. And finally, yesterday's session was a little bit of a topsy-turvy move for crude oil as well. So when we did see that 50 basis point cut coming in from the Fed, at that point you saw crude oil moving higher. But as soon as the comments started coming about that, these tools are insufficient, may not take further additional measures to counteract this, once again, they started coming off. But the OPEC meet, which happens on March 5th, March 6th, in that period, that's going to be more important to see what they do in terms of the overall supplies.
Yeah, well, Devina, so that's the interesting roundup around what the globe does. What India does is difficult to say. I must say, when we look at the mid-cap, small-cap indices as well, there has hardly been a stark deviation from what the large caps have done versus what the mid-caps have done. So hardly any changes there. And frankly, India versus the world too, I think it's largely been in line with what the world is doing. So I think that's what you probably take into account. I think in today's session, frankly, the performance of the private sector banks would be the key determinant. The last few days, they haven't quite shown that spurt. So, you've seen very flat moves from HDFC Bank, Kotak Bank, Bajaj Finance, and for the index to do well, these need to move in tandem. So all eyes one on these. And Sun Pharma, could be an interesting one. The stock could be in focus because promoters have bought shares. We'll talk about this in detail, but promoters buying shares yesterday, and the potential penalty for price rigging not as high, the fine that they are possibly going to pay not as high as the penalty amount, and therefore there is some positivity that probably Sun Pharma could show as well. And we need some positive news, don't we, these days, because somehow the markets get sold into, yesterday was an exception, but the markets get sold into even when the news flow is positive. Yeah,
and just add to that, SBI Card's IPO for the second day, end of day 2, was subscribed about 88-89%. So today could be a day where you could see a full subscription coming in for SBI Cards as well. Let's also take a look at what's happening in the derivative space. Agam Vakil is joining us right now to give us a setup of that. Agam, good morning.
Good morning, Devina. Well, yesterday we did see that recovery come through, and that, of course, meant some positivity, a lot of unwinding of positions that we saw as far as the futures is concerned. And, on an overall basis, that is exactly what we are seeing right now. We should have the Nifty futures open. As you can see, we've seen an open interest of around 3.3% in terms of the Nifty futures. The Nifty banking futures looking at an increase of open interest as well, around 4.5%. Let's move on and talk about the India volatility index. It's come off to a certain extent, but it's still at extremely high levels of around 24.5. Let's move on and talk about the put-call ratio as well, and that stands around 1.2 against 1.1. And this will be evident in the kind of change in open interest that we have seen as far as the your options markets are concerned, because Even as we saw an advance on the Nifty, we saw a little more writing around the 11,200, 11,100 puts, as you can see here. Not too much to go for when it comes to an increase in calls. Of course, we'll be watching after that. This is this week's expiry of 5th March. Let's move on and talk about your stocks then. And PVR saw a tad of recovery coming through. Of course, we saw a 1% advance here. Info Edge was the other one, which is looking at an interesting move, as was the case for HDFC Life. Two new entrants in the futures and options space. The first, expiry for them, and we're seeing some longs building in. The real question is if these longs can hold up. The Jubilant FoodWorks also saw an advance of around 1.7%, so watch out for that. It's come from nearly the mark of 2,000 to a little less than 1,700 rupees a share, and of course, Divi's Laboratories among others, which is looking at an increase in open interest. Let's talk about stocks which saw unwinding. We have Tata Chemicals. Of course, this is after the corporate action where its consumer business now becomes a part of Tata Consumer Products. Eicher Motors, NTPC, and Ujjivan Financial. As you can see, we've seen short covering in a whole host of these counters, and we'll continue to keep an eye on whether or not we actually continue to see that short covering play out in today's day of trade. Should we see some more strength going in?
Right, Agam, thanks very much for that. And add to that, one more stock that could make its entry is Godrej Properties from the April series if it still meets the criteria by the end of March. So watch out for Godrej Properties, 1,000 at that in yesterday's session. Pankaj Pandey, Head of Research at ICICI Direct, joins us right now on the show. Pankaj, good to have you. Good morning. Let's talk about whether or not we're looking at a market that in today's session sees a bit of consolidation, and the next few weeks, months to come, whether or not the pain will continue to persist.
Hi, good morning. I think the global setup continues to remain sort of weak, and I think even with 50 bips kind of a rate cut by Fed, the markets are not happy, largely because I think the rate cut expectation was slightly higher, which is what is sort of getting reflected in yields. And also, I think probably some kind of a QE was expected from the US, which the Fed did not deliver. So I think we would continue to see sort of knee-jerk reaction both globally and domestically, because domestically also we have seen some cases, and it might again impact the discretionary spending, especially in discretionary you have two big components. One of them is auto and the other one is the real estate, which again would keep investors on the edge. I think something similar is also sort of happening in China as well. So I think from that perspective, overall, I think things would remain edgy, but our sense is that largely we are not seeing the kind of cracks what one would have expected in the
Pankaj, sorry to intervene. Yeah. Pankaj, just wondering, China, because people are quarantined and not moving out, doing face-to-face meetings, one can understand that real estate, auto sales are not happening. We have very small few cases in India right now, right? You really think it has the potential to impact real estate sales and auto sales?
So largely, see, in case, so for us, I think the good thing can be that if the weather or the summer picks up, then probably I think we may not see that kind of a elevated level of a concern. But I think something like if you look at multiplexes, for example, PVR has got a good exposure towards NCR market. And off late, so while the expectation is that the box office collection would grow in double digits, up till now the movies, for example, haven't really done so well, and I think you have a couple of good releases coming up. So again, the fear is that probably if people sort of choose to sort of stay more indoors, then I think sentimentally you could see some bit of an impact creeping in. Not to say that the situation is alarming in India, but I think as a cautious measure also probably things will or things could get postponed. And which is why I think for auto industry also things have not been really bright, and this might again sort of be a slight dampener. So I think the overall situation in India is sort of still evolving, but I think one needs to be cautious, and I think markets are going to reflect that.
Okay. Pankaj, in the light of even the currency weakening the way it has, Do you feel that therefore, at least in the short to medium term, when there is this kind of uncertainty in the market, the defensive play is something that you can look at? So maybe IT stocks is something that you can probably deploy a little bit of money, not take an overexposure, but there are tailwinds, and that could help the portfolio.
Correct. So IT overall, if you look at, has largely been doing decent high single digit kind of a dollar revenue growth, and multiple wise also most of the stocks have been fine. But I think the only fear is that if you have travel advisory being issued and if companies choose to sort of stay cautious on the travel side, probably deal signings might sort of get delayed, although normal work might sort of continue and will not have an impact. But the deal wins probably could get postponed, especially because the US is definitely a big market and even Europe is not a smaller one. So while there may be benefit to what we expect that because of the rupee depreciation, but I think it might take time to sort of play that out. And again, we'll have to see what kind of domestic measures are taken. So probably that also would have ramifications. So I think domestically also, I think the clamor for rate cut is going to increase. So again, rupee again could be volatile, and it is difficult to say that it will remain depreciated.
Okay, well, let's talk about some key stocks in news as well, and Sumit Sarkar Johnson with a list of the few that all of us should keep an eye out for. Sumit, what do you have for us? Good morning.
Good morning, Neeraj. On the stocks in news, firstly, I have NBCC because the NCLT has approved the company's bid for JP Infratech with some modifications. Now, NCLT also said that the 750 crore rupees deposited by Jaiprakash Associates in Supreme Court will be a part of the resolution plan for JP Infratech. Secondly, Vedanta because Moody's Investor Service has downgraded the corporate family rating on Vedanta to B1 from BA3. However, the outlook has remained stable for all the ratings. Now, the downgrade was triggered by a sustained deterioration in the company's credit profile, says Moody's Investor Service. Hindustan Aeronautics because they have received a notice from the International Court of Arbitration on request for an arbitration from RUAG Aerospace Services. Now, the amount in dispute is close to 160 crore rupees, and this is against the alleged damages on the breach of agreement regarding a supply of structural parts for production of Dornier 228 aircraft. HFCL will also remain in focus because they have received a purchase order worth nearly 196 crore rupees from L&T to supply optical fiber cables for construction of Telangana fiber grid. Reliance Infrastructure and especially Yes Bank would remain in focus on the back of this news because Reliance Infrastructure has defaulted on a term loan due to Yes Bank, SREI Equipment Finance and Jammu Kashmir Bank. Now, the company has defaulted on payment of dues worth nearly 52 crore rupees, and the total loan amount taken from these banks was close to 3,729 crore rupees, of which nearly 3,600 crore is taken from Yes Bank. And lastly, Max Financial Services because they have approved a swap arrangement of Mitsui Sumitomo's stake in Max Life to Max Financial. Now, under the new arrangement, Max Financial stake in Max Life will increase to 93% from 72.5%, and the current transaction is expected to conclude in the next 6 to 9 months. And according to Investec, this new approved swap arrangement is positive for and value accretive for the shareholders of Max Financial Services.
All right. Sumit, thanks very much for that. Those are some key stocks that you need to keep a track of. Pankaj, I just want to come to you on the pharma names. Yesterday, we had news about the government of India banning the export of about 13 APIs. Today, there is news of Sandoz settling with the US Justice Department in the price fixing case, which could probably lead to some of the Indian pharma companies who are named in that case to go ahead and settle as well. Sun Pharma in particular because of Taro. What do you think is going to be the impact of that on some of these companies?
So overall, pharma, I think things are sort of still evolving. I think from a US FDA perspective, I think one positive can be that probably in case if there is a shortage of some of the drugs, probably they might sort of tweak the expiry date for some of the drugs. And then I think what we are also sort of not very sure of that, say even for Sun Pharma, while domestically they have been sourcing most of the APIs. But in case if they have got some vendors who have got exposure to China and the consequent impact of that. So I think overall exporters, things are still challenging. So we are not really have been chasing exporters even previously also. I think the domestic oriented names offer far more better stable growth, predictable growth. compared to exporters. I think what we have seen in case of some of the bigger names like, for example, Aurobindo, it's trading in single digits. Though the US market exposure is fairly high, their last quarter numbers were pretty good. But I think we haven't seen the kind of follow-up despite the attractive valuations. So our sense is that domestic oriented plays are far more better, and I think globally things are still sort of not very clear as to how things would sort of pan out. Probably one positive expectation is that the US FDA might take a relaxed view, and probably the kind of warning letters what you're getting might sort of subside. But I think that is still an event to sort of unfold. So till that time, I think despite these news flows, we would not be chasing the exporters.
Okay, don't chase the exporters is what Pankaj is saying. Okay, Pankaj Pandey, stay on. We'll want to talk about what was the top discussion in the morning meet today as well, and what are the key couple of stocks that you're watching out for. But it's time now to get in a piece of the technical opinion as well from our experts, and technical and derivative opinion. So Gaurav Bissa of LKP Securities to kickstart the proceedings. Chandan Taparia of Motilal Oswal actually also joins in on this conversation. Gentlemen, both of you, good morning. Thanks so much for joining in. Gaurav, how do you approach trade today? We are likely to start off flat, but the cues, if anything, are very confusing right now.
Good morning, Raj. It is confusing and it is going to be volatile. The thing is that we're not just talking about the technicals. It is matter of the virus touching some new nation or some new cases being reported, and that is causing a lot of volatility. However, if you note and if you just check on the charts also, last few days we have seen some more cases unfortunately coming in India as well, and there have been some more cases in some of the other countries, but so far we have been able to hold on to the levels of 11,050, 11,100. Now there are a couple of significance for that. One, if you want derivatives part, 11,000 put option of course has one of the decent concentration, psychological level as well. More importantly, if you look at the weekly charts in Ichimoku setup, it's very visible that it's trading in the cloud support area, which is again near 11,050, 11,100. From the lows that Nifty made a few months back, if you draw a trend line, rising trend line, it supports again come towards the level of 11,050, 11,100. That's the second significance. If you look at the monthly charts on Nifty, and if you look at the Ichimoku setup, then even for that you will see the Kijun, which is the most important average in Ichimoku, that is also placed on levels of 11,150, 11,200. So this particular zone is going to be extremely important. As long as we are sustaining and closing above these levels, there might be volatility, but we can expect a bounce sort of coming in the Nifty. A close below this would mean that we can see some more pressure. There can be some panic, incremental panic rather to speak of, that we can see in the Nifty index. So far, I am not too worried. We can see a small dip in the Nifty index today also, but any dip towards 11,150, 200 would be a buying opportunity. It has formed a bullish harmony because the grab pattern on hourly charts. Keep a stop loss of 11,120, buy around 11,180. On the upside, 11,350, 400 is what I would be looking at.
Okay, Chandan Taparia of Motilal Oswal Securities is also here with us. Chandan, a quick call on the index from you.
Yeah, we have seen a jump in the put call ratio from 1.10 to 1.21 in last two trading session. But volatility is not cooling down. Yesterday it fell down by 2%, but is still at beyond the comfort level of 24.5. So for me, volatility has to cool down below 18, 19, then only some sort of stability could be there. However, there is significance of put writing at 11,000, 11,100. But at the same time, follow-up is required. However, on last trading session, market managed to close on positive note, but need to surpass above 11,333. So what I understand, if market manages to hold 11,333 zone, then one can look for some bounce back move to take the counter long position for a move to us 11,433, 11,550. So after the recent decline, I am looking for a decisive range breakout or confirmation to play the bounce of 150 to 200 points in the index. Similar scenario in the Bank Nifty as well. So here also I am looking it to hold beyond 29,600. In that scenario, here also I am expecting 700, 800 points bounce back in the Bank Nifty index as well.
Okay. So how are you playing this bounce then, or this expectation of a bounce, Chandan? What are the stocks that you're recommending?
Yeah, stock specific, we have seen buying interest in many counter, but still the volatility is there, which is killing the intraday momentum, and that volatility cannot be ruled out at weeks of 24, 25. So trading ideas which we have selected to be with couple of counter which are outperforming and not fallen in the recent carnage. One can look at the couple of finance or FMCG counter, but here I selected to be with MFSL, The stock has completed its pole and flag pattern and holding the gains even after the market decline with support of 570 zone. Yesterday also it formed a perfect bullish candle with a small real body, which indicates some uptick could be there in the counter if follow-up happen. So recommending to buy on MFSL, Max Financial Services Limited, with a stop loss of 575 and looking for an upside move towards 620. Second trade, that was the market direction on the negative side in the auto space, sell on M&M. Just couple of days back, the stock has broken its multiple support of 500 zone after a long time. So I think any bounce could be sold till the 500 level is not taken out and the structure is gone negative in the auto counter. So recommending to sell on M&M with a stop loss of 480 and expecting it to go towards 440 levels.
Okay. All right. Some stock ideas there from Chandan, Taparia. I think Gaurav stock ideas also. Gaurav, your stock ideas for the morning?
First recommendation would be buy on Bata, where you have seen a good correction coming in, but one should also look at the larger picture. In Bata, we are seeing the trend has been quite positive. It has not been correcting too much. So the names that have been outperforming the market, these are the names that you tend to buy and you should buy on proper retracements. It has seen a decent correction and it's now trading near the 200 EMA. It's also trading near the rising trend line support area. So on that front, 1600, 1602 can be the stop loss, and on the upside, 1660, 1680 is what I would be expecting in Bata. And for the short side, RBL Bank is looking vulnerable, where we have seen a breakdown coming from levels of 295. So any dip below 290 can be sold, conditional sell, a target of 280, stop loss of 295. So I think these are the two recommendations I want to keep on radar.
I just want to read from Chandan. Your target on Max Financial is 620 rupees per share. Am I correct?
Yeah, true.
Okay, so Max Financial is the call from Chandan Taparia. I just want to revisit that. The stop loss is at 575 for Max and the target price is 620. Let's just pull up Max Financial. This is the one month return of 22% buy with the target price of 620. However, sticking to technicals and sticking to charts, onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we're looking at Canfin Homes, and there's a negative signal which the trender is suggesting right now, and we've seen substantial enough weakness in the counter. In fact, it's ended lower on 5 out of the last 6 trading sessions, and with that, the trender suggests that we could see further weakness coming in. But like we always do, let's just try and understand what the trender indicator is and how do you interpret it. The trender is a Bloomberg proprietary indicator, and it basically uses the average true range for the purpose of generating a buy or a sell signal, and also helps you manage your stop loss. How do you interpret it? You go long when the trend line changes its color from red to green, and you go short when it changes its color from green to red. This color change happens when the stock price on a certain time frame closes below the mark of the trender, and we've seen that happen at least on the daily time frame for Canfin Homes. So the green line over here is where the trender is, somewhere around the mark of 490, and the stock in yesterday's day of trade closed almost 3% lower at about 485, and with that we've seen the negative crossover happening. Additionally, the high of the last 2 consecutive trading sessions has been somewhere around the mark of 502 to 505. So there is significant resistance upwards of 500, and we've seen a rounding top formation happen as well. So multiple factors indicating that there is weakness right now in the counter, and the risk to reward ratio also is extremely favorable.
How well has this worked in the past, Yash?
Devina, 3 out of the last 4 times, with this one being the 5th one. The average 1 month returns have been somewhere around 4.5% on a closing basis, but it could go as high as even 6%.
Okay, got that. Yash, thanks very much for that. That's Bloomberg Edge for you. Canfin Homes may start to look a little weak. Aside from that, a few other stocks. Z, for one, in yesterday's session saw a good bounce back, which totally negates the losses from last week. So the last 7 days performance now of Z is just about in the green, a period when the markets actually dragged quite a bit. A quick word, Chandan Taparia, on Z.
Yes, looking at the Z, however, we have seen some stability in last couple of trading sessions. But overall medium-term structure of the counter is still in pressure, because on year-on-year basis the stock has seen sharp decline in last 3 years, and on monthly or the quarterly basis the trend is negative. But the way it is respecting to its multiple support of 220, 230 zone, some sort of recovery can be seen, the way it has recovered by 7% on last trading session. So I think some short-term bounce cannot be ruled out, which may take it to 261 and 275 levels.
Okay, well, a short-term bounce can't be ruled out, but I don't know if people are playing for those bounces as well. Anyways, Pankaj, Let me come back to you. This morning meeting, what were amongst the top companies discussed? Where is it that you have a high conviction buy, if you do, at the current times?
So largely, if you look at two of the most important impacted sectors have been sort of auto and metals. I think that is one space we have been sort of avoiding for some time and will continue to avoid. I think we haven't seen the kind of crack what one would have expected in some of the growth names. So there, doing averaging does not sort of make sense. I think what is looking better at this point in time is infra names plus the cement companies. I think that is one space wherein we would expect that overall ordering and tendering activity to be better. Plus, overall, I think cement names have come out with decent set of numbers. Not the volume growth, but pricing growth has definitely helped and is likely to remain firm. So that is going to help. So right from Ultratech to JK Cement to JK Lakshmi Cement and Ramco Cement is what we are liking. On the infra side, I think we are looking at domestic-oriented players like PNC Infra and KNR Construction. I think they've been winning orders of late, and I think we've seen decent amount of crack as well. So I think these are the kind of names what we are liking. I think L&T again could get impacted given the fact that they've got good overseas exposure, so which is where I think probably the weakness in the stock is still there, and we are not chasing that stock at this point in time.
Okay. L&T is still looking weak. But talking about metals, the Nifty Metals Index was the top performer in the session yesterday. It was up 5.5%. And Nifty Pharma too, which comes next. It was up about 5.2%. So both these pockets did exceptionally well in yesterday's trade. But Chandan, Taparia, any of these metal names, JSW Steel, Tata Steel, Hindalco, that look attractive?
See, the metals are likely to be highly volatile, and the way market is corrected, metal stock fell down sharply, and now most of these stocks have gone into the deep oversold territory. So because of that, some bounce could be seen, but I am not much comfortable and not liking the volatility of these counter. So what I suggest, if someone is to play the bounce back move, better to be with Jindal Steel. This stock has recently made low near to 150, 149 level, and put to eye congestion is near to 150. So because of that, some bounce of 3-4% cannot be ruled out, which may take it to 170. But one has to remember that medium-term structure is negative, and volatile swings cannot be ruled out in the metal counter in line with the updates from the global indices.
Okay. And yesterday's session was active for some of these specialty chemical companies as well that we've been talking about ever since, you know, the coronavirus epidemic kick-started. So we're talking about Deepak Nitrite. Vinita Organics had a decent outing yesterday, but didn't close at the high point of the day. It was up just 1.5%. And intraday, it moved up higher. And the day before that was up 6.5%. PI Industries, for that matter. Any of the other names, Aarti Industries. Pankaj, would you like any of these names?
So on chemicals, we don't have a coverage, though actively we are looking at some of the names what I have mentioned, but I think at this point in time, we still don't have much of concrete thing to sort of say about any of these companies. So I would refrain from commenting on any one of them.
It's very interesting, the market reaction to these names. So a bunch of other companies have come in and said that they don't get impacted or don't get impacted as much, but there has been punishment given even to stronger names. Dixon, for example, which fell up, which is, I mean, they've mentioned that the maximum damage is 2 to 3% as of now, but the stock has corrected quite strongly from 4,500 odd to sub 4,000 as of trade yesterday. It just bounced back a little bit, but somehow the bounce back that has come in into some of these specialty chemical names has been very, very strong. And
you know, honestly, it's not a bounce back. They never really fell.
A little bit,
Except for a Vinita Organics, which came and clarified that they're actually beneficiaries. Even post that, the stock didn't do well. It actually went down. It hit a high of about 1,050. From there, it went sub 1,000, and it's still trying to just get back to levels of 1,050. So there's no clearly, there's no outperformance as such, at least for Vinita Organics in that pack.
yeah, no outperformance, but the point is...
The others have outperformed though.
Yeah, but my larger point is, for a company which doesn't fall when other stocks are falling, is a bit of an outperformance in itself, simply because that pocket is just looking so strong right now. There's a lot of fanfare there, and the stocks are really multiplying. We'll talk about these names post pre-open as well, because it's just about 35 seconds away from pre-open. And must say, what is pleasing to the eye, even though it's not a very large tick of green, is that bit of green that we're seeing on the Asian screen, Devina.
Yep, it is. 26 seconds left to go for market pre-open. Rest of Asia is pretty quiet actually today. There's not much happening there. China is flat. Japan is up about 1/3%. Hong Kong is flat as well. Slight negative bias coming there. SGX Nifty, like Neeraj highlighted, has done its bit. Today is up about 1/4% at 11,294. Interesting to see what our pre-open looks like, and therefore I think you've started getting Tata Motors JLR numbers as well, so maybe the reflection of that could be seen in today's session for Tata Motors too. Watch out for all of the bigger names that did well. Reliance Industries, HDFC Bank has not yet been contributing to the upside, so whether or not that sees a move in today's trade or not. That's a pre-open for you. Tata absolutely flat on the index. Tata Motors is also flat, and these prices will definitely keep gyrating till we reach a settlement around 908. Reliance Industries up about 0.5%. HDFC Limited though, the first sticks are showing you a big pop, about 4.96%. Dr. Reddy's is up about 3.66%. And I want to look at Sun Pharma, the big news driver of today, and what's happened in the back of the Sandoz settlement with the US Justice Department. Not much of a material impact. In fact, the stock's up about 1%. 398 after a big 6% pop that we saw in yesterday's session. Bajaj Auto, a big loser yesterday. Today is recovering some bit of lost ground, so it's up about 2%. Coal India, Bharti Airtel, Yes Bank, SBI is at 293. ONGC, Adani Ports, all of these names doing well. Today's session, number of losers are more than yesterday. IndusInd Bank is down 1.5%. Tata Motors, again, like I said, is now down about 1.8%. BPCL, Power Grid, HUL are some of the other losers in trade this morning. Some respite for the currency, but yesterday's plunge really pulled it back quite a bit. 73.3, I think, was the close yesterday. Some recovery in today's session.
Okay, some recovery, yes. Let's see if this lasts. What about specific stocks at the broader end of the spectrum? I know the larger names like Sun Pharma are the biggest talking points, but there would be a few others that you should be keeping an eye out for as well in the session today. So do watch out for the movers. Let me just mark them. I don't know if a BF Utilities will have a 10% uptick or no, but it looks like it'll start off well. Let's wait and watch. There is some talk of some selling coming in stocks, shares of UBL or United Breweries. I don't know if that itself has a bit of an impact on the stock price or no. Well, marginally off as of now, but let's see if this indeed lasts. And then from amongst companies in focus, I think Interglobe Aviation and SpiceJet would certainly be in focus. Airline after airline on the global front are asking their staff to go on unpaid leaves in order to, well, not spread the virus and also combat the slowdown that they're seeing in business. India is probably a tad bit better, but don't quite know if this will worsen. So do watch out for these stocks as well in the session. And, you know, all the pharma names, and there's Ipca Labs, Biocon, Strides Pharma, everything went up in trade yesterday. Let's see if the momentum continues on those names. So that's the other set of names.
Just look at the first sticks in Infosys and TCS. So we're talking about IT being a slight bit of a defensive play. But again, that's what's keeping the index up 1%. Infosys up 4.5%. But again, these could be the abnormal trends that could come in the first few minutes. 2% for TCS, HCLX up about 1.5%.
Yeah, seems unlikely to see a 4% uptick on Infosys, but you never know these days. Surprises do happen. But anyway, so that's the sum and substance. The bond yields, if we can just quickly pull them up and show you what they are doing as well before we move back to our experts and try and take in some queries as well as some specific stock ideas. 6.27, so a substantial pullback in yields, but that's also a global phenomenon. You've got to keep that at the back of your mind. I think a lot of people are talking about whether now the ball is in RBI's court and we might actually see the Reserve Bank of India act upon this after what the Fed has done, after what the Australian Central Bank has done as well. Keep those things at the back of your mind. Pankaj Pandey, before we thank you, you don't have specialty chemicals under your coverage. I can understand. Just one broad view on any of these companies which got disrupted because of the coronavirus detection in India. So the two exhibition companies, PVR Inox, the aviation stocks fell, Delta Corp fell, and Phoenix Mills and some of the mall operators fell. Do you have any stock within your coverage?
So we have most of the stocks under coverage. In fact, we have sort of already downgraded hotels like Indian Hotels. So earlier we had a buy rating, now we have sort of downgraded to hold. Largely because, I think the situation is still evolving, but our sense is that as a cautious measure, discretionary spend will take some backseat, and as a result of that, probably although the companies are not sort of upfront in terms of saying the kind of impact which they are right also. But our sense is that you'll see weakness in some of these names till the time we get very comfortable that things have sort of, or we have overcome the overall situation. So, our sense is that all these are good names, but then again, I think sentimentally for some time we would expect weakness in most of these names.
Okay, we'll let you go on that note, Pankaj. Thanks very much for joining us this morning. Deepak Jasani of HDFC Securities is also joining us on the show this morning. Deepak, thanks very much for taking out the time. This has been considered as a time-bound event, and for growth investors who are ready to oversee the volatility of the markets currently, this is an opportune time to go ahead and invest. Do you agree with that?
Yeah, good morning. A lot will depend on how much the investors are already invested in. So for people who are already fully or near fully invested in equities, I think they could wait for situations to stabilize. But for people who are yet under invested in equities, this correction may be a good time to start their staggered or SIP buying, either in mutual funds or direct equities.
Indeed, for all the people who've been waiting on the sidelines, waiting for attractive values to come about, this could definitely be an opportunity to make those staggered investments. In terms of individual pockets, Deepak, what's the analysis whether or not any specific sector, according to you, is looking extremely weak right now, or a possibility of a turnaround in any particular sector where there has been some stability and therefore investment is warranted?
Yeah, so basically, whenever such events happen, the first things that happen is these consumers will cut their spending. So whether it is staples to an extent, whether it is durables, auto, etc., whatever is directly impacted by consumer spending will get a hit. But of course, that is a temporary hit because a lot of it will typically get postponed. So that is why in case we see more attractive levels in the market, then it would be a good opportunity to keep buying such stocks. So that once the virus situation stabilizes, then all the postponed purchases or spending will come into play, and people will start buying what they have postponed in the past. So that will have the first impact on the as far as sectors are concerned.
Deepak Jasani, what's the quantum of retail interest are you seeing in the SBI Cards IPO, and what has been your recommendation to your clients? Have you asked them to subscribe to the issue, considering the market nervousness around the global situation right now?
Yeah, so we are sub-syndicate members, so we are not officially allowed to make any recommendation in the media or directly to our clients. So, but broadly, what we felt was that although the valuations don't look very attractive, the potential in the credit card industry is large enough. Now, valuation-wise, each one will have to take their own call. But as far as the credit card industry's potential and SBI Card's placement in that is concerned, there should not be two doubts about that.
Okay. Well, the pre-open rates have settled, and we are likely to start off about 0.5% higher. So Nifty 50 about 48 odd points. Banks yet again likely not to do as well as the Nifty 50 if the pre-open rates are to be believed. The question is, can these rates last? Well, I think time will tell. Now, Deepak Jasani, the two large auto names, Bajaj Auto versus Hero MotoCorp, sharp drops in Bajaj Auto over the last 6 or 7 days. Today it's starting off well. Hero has seen an upgrade today, but it anyways bounced back about 3 or 4% in trade yesterday. Do you like either of these two names, and why?
Now, as we discussed earlier, consumer spending could get hit in such circumstances. Two-wheeler market is a very mature market. Penetration levels are typically very high, except in certain rural pockets where due to adverse climatic or food price conditions, the rural incomes could not increase, and that is why there could be a cutback in the spending on two-wheelers. But having said that, now if the rural spending is expected to rise because of the bumper Rabi output as well as good water levels, and provided the monsoon forecast is good, then yes, two-wheelers could come back into fashion. But let us remember that the base is very large. So growing on such a large base in a large percentage will be difficult unless the export markets show a lot of resurrection as far as Bajaj Auto is concerned. But for Hero Honda, I think a large revival in rural spending is required, which currently is not clear whether that will happen or not happen. So we can at best look at some sort of a trading play in these two stocks.
All right. That's the two-wheeler names. I just want to highlight the currency now is back above 73. So the strength's come back in at 72.97 to the dollar is where we are at, about 0.5% gains this morning. One stock, Chandan Taparia, a few days ago was a consensus buy, at least looking at technicals, and that was SBI. Now SBI is struggling under 300. It's somewhere closer to 290 now. What would the positions be now?
Yeah, this used to be one of the consensus counter as it has taken support at 300 and was ready to move towards 330 and was giving some breakout, but I think some sort of decline in the market sentiment has taken it back to 300 level. But again, I believe this is a range-bound counter. However, other PSU banks may not perform, but SBI may see some sort of buying interest or support near to the lower band of zone. So suggestion is one can look at the support near to 282 zone and can go for bounce towards 303, 305. So base of this stock is shifted lower, but still the chances of bounce cannot be ruled out in the counter.
Okay, and let's tell you, since we are just minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Reliance Infrastructure defaults on a term loan owed to Yes Bank, Shrey Equipment Finance and Jammu and Kashmir Bank. The company defaulted on dues worth 52 crores. Moody's Investor Service downgrades Vedanta's corporate family rating to B1 plum BA3. Downgrade is triggered by a sustained deterioration in the company's credit profile.
All right, the SBI board is said to have approved the resolution plan for Reliance Communications, through which lenders are expected to recover around 23,000 crores.
The NCLT approves NBCC's bid for JP Infratech with modifications. 750 crores deposit by JP Associates in the Supreme Court will now be part of the resolution plan.
Godrej Properties will be included in the futures and options segment from March 27, subject to the fulfillment of the eligibility criteria.
And in key bulk deals, Nalanda India Equity Fund acquires 2.41% stake in Serra Sanitaryware at 2,499 rupees per share, and CDC Group sells 3.5% stake in Narayan Rudalaya at 320 rupees a piece. Well, healthcare is firmly in focus. Sun Pharma is likely to start off as the top gainer. Gaurav, Bissa, how is Sun Pharma looking? Yesterday was very active, has gained a little bit today as well. Would you be trading this one?
But it would have to be a positional ball for the reason that it had a good support at area of 380. It gave a false breakdown sort of, and then we are seeing some spike towards 395. So one needs to keep a stop loss of 380. As long as it's trading above the levels of 380, one can expect levels of around 410, 415 coming in a matter of a day or two. But it will have to be a positional trade with a slightly deeper stop loss.
Just want to come to you on Avenue Supermarts and HDFC Bank. Both of these stocks, last few days, though have not cracked much, they've been a bit subdued. Would it be a good entry point, Chandan?
Yes, I think this Avenue Supermart or D-Mart looks promising at lower levels, because this stock is the one of the counter which is not corrected. However, some sort of profit booking was seen in last 2 weeks, but again it is taking support near to 50 DMA. So I think some sort of buying interest could emerge. However, because of the T to T also, some sort of less liquidity was seen in the counter. But I think the support of 2150 could act as a major level, and because of the stock can move towards 2450 to 2500 levels.
Okay, a minute left to go for market opening. Let's get in those quick top technical calls from our experts. I'll keep it with you, Chandan. One top call for the morning.
Yeah, then I'll go with Max Financial Services Limited, MFSL. This stock is forming the positive price pattern. We are looking for target towards 620. One can buy with a stop loss of 570.
Okay, Gaurav, Bissa, what about your top call?
For me, it would be Bata India, where we have seen a good bounce sort of coming from levels of 1610, 1615, which is again a trendline support area, 200 EMA as well. So for me, that would be Bata India.
Okay, Chandan, Taparia and Gaurav, Bissa, gentlemen, leave it at that. Thank you so much for taking the time out and speaking to us this morning. Appreciate your time. Deepak, Jasani, stay on. We want to talk to you about what would be the key stock that you would be focusing on today. So we'll do that immediately post market open. 20 seconds left for the markets to kickstart trade. We'll have a start in the green. Keep that at the back of your mind. The question only is, can we build on from there, or would we be around these levels? Because yesterday we had a fabulous day of trade. After 7 days of a downtick, we had a start in the green. Let's see how we build on in today's session. Here are the first trades. The Nifty 51 points, about 0.39%. The Sensex a third of a percent, 165 odd points, and the Nifty Bank very, very muted. We've seen this consistently now the last few days. The bank Nifty is not performing and just about 24 odd points in the green. So clearly banks are out of favor right now. At least the large private sector banks seem to be. What about the mid cap and the small cap indices? They should come up on your screen. Let's see how they are doing. Well, about 73 points for the mid cap space. Small caps about 0.5%. So the going is not bad. Let's see. The start is not bad. Let's see if it continues. But mind you, the Nifty Bank has already slipped into the red. And I think that's courtesy what's happening to banks here. HDFC Bank is down about 1%. That's the key drag. Kotak Bank too down about 0.5%, and I think it's the HDFC Bank effect out here on Kotak Bank. IndusInd Bank as well as Axis not quite out there in terms of gainers. So the private banks clearly have a spot of bother, and that's keeping this index a bit subdued. Yesterday the PSUs gained quite a lot, but Power Grid is starting off slightly muted today. And Vedanta, JSW Steel, Tata Steel, well, yesterday were the big gainers, but it just shows the perils of trading into these names. They're all starting off lower, and as we speak, while the indices are flat, the Nifty Bank is already down 0.3%. So clearly the private banks under problem. What is doing well? HCL Tech continues to rise and shine. Tech Mahindra giving it company. So those two, and TCS and Infosys. So clearly Nifty IT is giving that bit of a support. UPL is the top gainer, up about 0.18 or 0.19%, and Bajaj Auto bounces back after a few days of loss, up about 1.5%. Very quickly, at the broader end of the spectrum, a few pockets that you should monitor in the session today. While Nifty IT is doing what it is doing and banks are not doing what they should do from a bull's perspective, stocks which are trading near 52-week highs yesterday, Ipca Labs up another 2.5%, and Deepak Nitrite up another 0.5%. But speaking of Ipca Labs, Pharma had a good day yesterday. Let's see if some of the pharma names are active today. The Biocon, Stride, Sashun, etc. Ajanta Pharma. No, not quite. Yesterday was a big day of gain. In today's session, slightly flattish in the session, though Ajanta is starting off higher. Devina, what are you spotting?
Future consumers up about 6% in today's session. Indoco Remedies 5.5% higher. Diwan Housing Finance, this period of a sell-off has not really impacted Diwan Housing Finance a wee bit. The stock in the last 7 days is up 38% in a falling market. Aside from that, Indiabulls Ventures too, clean chit being given with regards to its operations. The stock is now moving higher, about 4% up, and it's been doing well since the last 3 or 4 trading sessions. So that just adds on to the gains. Indiabulls Housing Finance is the other one that gets impacted because of that verdict. It's unchanged for today, but that's too been holding out. Future Lifestyles up 2.5%. Tata Coffee has moved up today by 2.5%. Raymond 1.9% higher. Prestige Estates does well. Godrej Properties is up 1.5%, so 1,015 on the stock. Remember, this one has been really flogged in the recent times with regards to the sell-off that we're seeing in the counter. Aside from that, Hexaware, Container Corp, Bharti Infratel, that's a larger name, but SL Propack is up about 1.3%. Trident is doing okay for itself. I just want to pull up Phoenix Mills to see what that stock's doing. Inox PVR to see if there's any spillover impact from the last few days that we've been seeing. Phoenix is up about 0.5%. Inox is down about 3%, so 375. There was a recovery yesterday that's getting back today again. 2.8% lower for a PVR. Breadth of the market absolutely flat, so no clear direction this morning. 585 stocks, around 600 stocks that are advancing, about 483 stocks that are declining. So marginal pip over for the advances, but nothing too material.
Well, I wish I could ask Deepak Jasani about HDFC Bank and the pain there, but we can't. But Deepak, what we can ask you about is over the last 2 or 3 days, when you analyzed a bunch of these names or the mid-cap end of the market, where is it that you have conviction to invest in, with the presumption that the investor will not get impacted by the short-term volatility and is investing for the next 2-3 years? That one very strong conviction idea.
Yeah, it is very easy to say that he will not get disturbed by the downside volatility. It is very rare that any investor does not get disturbed. But anyway, this Monday we had come out with a report on Narayana Hridayalaya, where we felt targets of 378 and 435 are possible. Mainly because of it has a strong brand equity in healthcare space. There is a ramp up of new hospitals which will drive momentum going forward. Higher occupancy and case mix to drive margins. Return ratios are expected to improve going forward. And we estimate about 11% revenue and 60 odd % PAT growth over the next 2 years. So that is one stock which we are looking at currently.
All right. Do you track the footwear space at all, Deepak? Bata, Relaxo for one, very strong fundamentals. The growth of the company, though it dipped in Q3, but the management commentary regarding how they're going to surpass industry growth, clock in a CAGR of 15% versus an industry growth of 12%. That's actually not really helped the stock too much. It's corrected significantly from levels of 810. It's now down to 670.
Yeah, we don't have an active coverage on Relaxo, but I think their business model has been good. The promoter reputation is also quite intact so far, and a lot of funds have a fancy for that stock. So I think this may be one of the better stocks in the consumer space.
All right, maybe just the fact that the stock had been an outperformer. Some profit taking on the counter today as well, down about 1.7% at 685.
Deepak, Jasani, that I don't know what kind of coverage do you have in the specialty chemical space, but presuming that you guys do oversee it, that space has gained a lot of traction and is very, very resilient even in the current times. Do you have an earnings assumption for companies which might do well over the course of the next 12 to 24 months on earnings?
Yeah, I think one will have to sort of sift between various categories of specialty chemical companies. There will be some companies which will have a temporary blip because of this China's supply disruption, which will be very temporary for a couple of months or maybe 1 or 2 quarters. But I think because of this situation, some solid, well-established old companies which are quite well integrated across the value chain look interesting. So among these two, I think Atul and Aarti Industries stand out as far as and look interesting from a slightly longer term perspective.
You reckon that the earnings growth of 15-20% CAGR might be possible for both over the medium term?
I should think so.
Okay. As we speak, though, viewers, keep in mind the markets are trading in the red now, and 0.25% in the red for the large caps, and the banks are down about 0.5% or thereabouts. HDFC Bank has slid to 1171, and that's a sharp crack in that one too. So that is essentially pulling the bank Nifty lower. But I must say, stocks like IndusInd Bank too are correcting about 1.78%. So there is pain out there as well. Bajaj Finance at 4428 is in the red, and Reliance Industries, despite the Morgan Stanley note, showing optimism, is in the red. In fact, there are only 1 or 2 gainers, which is Asian Paints and Bajaj Auto, which are trading higher. Almost everything else is in the red. Now let me ask you a converse question, Deepak. Where is it that due to this either virus-led fears or otherwise, do you reckon that earnings could get hit? When those first cases got detected, there was a knee-jerk reaction on a PVR, Inox, Delta Corp, SpiceJet, Phoenix Mills, and today's session too, the exhibition stocks, Inox and PVR, are correcting today. Would you use this weakness to buy, or do you believe that there could be a bit of a prolonged weakness here?
Yeah, so basically over the last year or year and a half, we have seen consumer stocks gaining in valuations quite a bit. The multiplexes have also delivered good results over the last 1 or 2 quarters, and that is why they have got re-rated on the upside. Now this coronavirus thing could sort of, if it spreads majorly in India, starts spreading in India, then probably people will keep away from going to the theaters and consuming their F&B products. So there could be a temporary hit on them. Now, if you want to be bullish on multiplex stocks, you will have to take a view on the content, which will be displayed at these multiplexes quarter after quarter. So there again, it is a slightly tricky thing to do. So at a particular valuations, I think these stocks could be looked at. But I think we will want them to correct a little more before we look at them from a buying perspective.
Okay, Deepak, we leave it at that. Thank you very much for joining us this morning.
My pleasure.
Gautam Duggad of Motilal Oswal Financial Services is also here with us. Gautam, great to have you this morning. Thanks for joining in. What have you made out of whatever's been happening? We haven't spoken ever since the first reaction to the coronavirus epidemic.
Hi, good morning. I think this is clearly an unprecedented event over which nobody has much cue, and therefore markets are reacting every day to global cues and news flow which is emerging. It's a very tough period for investors out there, especially more so for short-term guys, because the direction of the market changes depending on the news flow. What is very clear is that the volatility for the key indices will remain very elevated in the next couple of weeks till we get handle around this news flow. As things stabilize over a period of time, I think then probably sanity will prevail and market will go back to fundamentals. From a near-term point of view, two things which are very important. One is how policymakers react to it. Clearly, central banks cutting interest rates may just be of a sentimental value because that cannot change the impact of virus on physical economy. But it can clearly prevent things spilling over into the financial market. So we've seen what US Fed and Australian Central Bank has done in the last 24-48 hours, and possibly our central bank may also react in the next couple of days. Secondly, the impact on the underlying economic growth and corporate earnings. I think that is where more attention should be paid by investors. Clearly, short-term GDP growth impact will obviously be there if things persist for a while. So things related to consumption, travel, tourism, anything which involves public places will clearly get impacted, as you've been discussing with your previous guest on multiplexes and all. More importantly, if this scenario persists, then clearly, as per our analysis that we've done over the weekend, our team has spoken to a lot of corporates in the sectors which are getting impacted. One thing which is emerging is that global cyclicals will have a first order of tangible impact, be it metals or oil and gas, because they're in the first line of fire. Commodity prices are going down. Then auto, we have seen February, couple of corporates have already commented that there is an impact on supply chain. Consumer durables clearly is linked to the global trade, and they're dependent on China for some of the components, so they will also get impacted, and it is coming at a very inopportune time for them because they were to enter into a busy summer season. The only beneficiaries out of this seems to be chemical companies, which is where we have seen price action also, and then as a indirect beneficiary, some of the consumer companies which use crude and crude-based raw material for their operations. But again, that will get offset by some demand slowdown that may happen because of people avoiding going out and eating out. So net things are fluid. We don't have any clue on how it will end, but pays to be more vigilant around the evolving news flow.
All right, a few counters just to watch out for. Obviously, we were talking about aviation stocks, and Indigo and Spice, both of them have in a way crumbled quite a bit since the start of the trading session. So 4.5% lower for Indigo. For SpiceJet, it's done about 7%. Remember, most of these companies post the Jet Airways debacle had also started to add new fleet to gain in the market share, to make sure that they are adequately well capitalized in terms of their fleet, to make sure that those additional routes can be taken care of. And now this is going to definitely make some of them lie idle for a bit. But that's the impact of the stocks. Avenue Supermart, and I wanted to ask Gautam about, since we were talking about the consumption theme. Avenue Supermart, the OFS came at about 2,049. It was a steep discount to at that time's traded price of 2,500 plus. The stock's at 2,200 now, Gautam. Is this a good risk to reward scenario for Avenue Supermarts if you were to take a look at consumption and want to enter into a good quality stock?
Devina, our preference in consumption has been very clear for last 3-4 years now. As far as consumption is concerned, our preference in staples is Hindustan Unilever and Britannia, followed by in discretionary we like Pidilite, and in super discretionary, which is retail, specialty retail, the number one preference has been Titan. That continues. If you move towards smaller discretionary retail companies, then within that our preference is ABFRL and Trend. In fact, these are companies which have delivered consistent compounding over the last many years. And even now, if you look at the results of some of these companies, they seem to be living in a different world. Hindustan Lever has delivered a 5% volume growth, when peers which are much smaller in size, 1/4, 1/5, have delivered 2 to 3% volume growth. So clearly margin expansion coupled with volume growth is helping them. So that remains a number one preference for us in the staples space. Titan, we believe that the rising gold price with some lag will have a very positive impact on their bottom line. Initially, there will be a knee-jerk reaction on volumes as customers defer their purchases. But over a period of time, as we have seen in the earlier cycle from 2006 to 2011, the rising gold price clearly adds to the bottom line of Titan. And in an environment where competition is completely decimated in the unorganized space in jewelry, they are standing tall and they're continuing to gain market share across regions, across geographies. Pidilite, as I've said multiple times, is a stock which requires least analysis. If you go by track record of last 15-20 years, they have compounded very well both on earnings and stock market returns. Remains a monopoly even after 5 decades of operations. Falling raw material prices and VAM prices will definitely help them. A lot of consumer companies will have benefit of raw material prices, but not everyone will be able to extract it. Only those companies which have good pricing power will be able to utilize this benefit of falling raw material prices. Most of the others may have to pass on some of it to ensure that the volume growth does not fall off a cliff. As regards Avenue, we've been cautious on that front because of valuation, and clearly that has not worked. So that's something that's a counter where our view hasn't really helped because stock has kept on doing very well. The numbers have been fantastic for the quarter that has gone by, but we still find valuations a little more unpalatable at this stage, despite some correction that you spoke about.
Gautam, fundamentally, what's the call on the airline stocks? They've corrected quite a bit. SpiceJet maybe more than Indigo, but both of them have had their issues other than coronavirus and other than the coronavirus scare, and now that scare might drive sentiment if not actual earnings. What's the fundamental view here?
Neeraj, as far as this stock is concerned, aviation or metals or oil and gas, commodity dependent stocks, it's very tough to take a long-term fundamental view on this kind of sectors. So I believe these are trading sectors, and those who are good at spotting trends in trading, they should only venture around the stocks. For investor, it is always tough to make money on a consistent basis in this kind of counters. At some point of time, crude prices will spike. At some point of time, there is geopolitical tension. Now it is coronavirus. Sometimes there is management-related issues. So it's very tough for a guy who's not, keeping an eye on news flow 24/7 to make money in such kind of stocks. So I would rather stay away from them. If I have a trading mindset, maybe, given that crude prices have fallen so much and stock prices have corrected, somebody may look at a trading bounce. But from an investment perspective, I will still stay away from all these three sectors because there are so many moving parts. Even in normal times, the moving parts are multiple. So it takes too much of effort to analyze these companies, and still your ability to make money is very low, given that you cannot predict all the events at any given point of time. So maybe trading upside and downside will be there, but to take a long-term investment call, it's fraught with a lot of risk and uncertainties.
Okay. Gautam, one last question. That's particularly with regards to the overall mood right now to diversify. If you have that incremental cash lying with you, is it a prudent call to diversify from equities, considering that whatever period of uncertainty lies ahead, you already have a certain amount of deployment in the equity markets, and therefore diversification with that little additional incremental cash is not a bad idea?
Yeah, Devina, see, it's very simple. We've seen in the past, if you look at the last 10 or 15 years, whenever there has been a big market correction because of global reason or global parameters, again, this is something very different. We have not seen this for last 15-20 years, and it is still an evolving situation. So it's very tough to predict where markets will settle. But like you said, if somebody has a cash and wants to diversify and add, this is as good a time as any, unless you have a very short-term view. Then even in normalized scenario, it's tough to take a call on short-term market movements. But somebody who has a 3 to 5 year view and has been sitting on the sidelines waiting for correction, and the markets were at 12,200, 300 a month back, this is a good time because markets have corrected 10%. People can deploy some money and wait for more correction. If it happens good, you can deploy more money. Else, what you already deployed can see a rise in value. But again, you have to be extremely circumspect about the sectors that you're putting money into, because the economic growth is narrowing. You are still in that 4.75% band. The government's official estimate for FY20 is 5%. FY21 could swing any which way depending on how long this crisis persists. But in the best case scenario, we are talking about 5.5 to 6% for FY21. So economic growth is not broad-basing big time. A lot of sectors, manufacturing, construction, exports, still remain stagnant. So therefore, even if the market has to react to the evolving underlying macros, if we move towards 5.46, then also not all sectors will participate in the market rebound or market recovery. The rally, if at all, or recovery will be very gradual in our view. Market can remain very narrow even in CY20, and therefore it is very important to see which sector one is taking exposure to. At this point of time, I would more than be willing to err on the side of caution and be with sectors where there is incrementally higher earnings visibility, even if it comes at the cost of a slightly expensive valuations.
Probably Asian Paints may fit that bill. Crude oil prices coming off will also aid it further. But Gautam, thanks very much for joining us. Really appreciate you taking out the time. Markets, that's down about 1/3%, with the bulk of the weight being put on the downside by Nifty Bank, which is down 1%.
Yep, HDFC Bank, the key culprit, but a lot of others too participating there. Let's wrap it up on this leg of Indian Open. From Devin and me and the team that put this show together, thank you so much for watching.